Hello, everyone, and welcome to today's Knowledge at Noon. This is AI in financial services, opportunities, and risks. Today, I'm joined by instructor for our Managerial Finance certificate, Andrew Feng. He has 25 years of diverse experience in financial services, and Andrew is a principal finance analyst with the Federal Regulatory Agency. So, with that, Andrew, I'd like to turn it over to you. We will start the presentation, but if you want to say a couple words about yourself before we get into, that would be great.
Thank you, Jonathan. Can you hear me okay?
Yep.
Welcome, everyone. And I'm going to keep as much time to the topics as possible because it is a pretty large topic and popular one. So let me just maybe start. Jonathan, let's go to the first slide. So again, the topic is AI, machine learning, and impact on financial services. Via the lens of opportunities, of course, there are risks associated with that as well. So let's look at the kind of the bigger background, what I call mega trend of big data and advancement in computational technology that paved the way for the current landscape of AI machine learning. So first of all, the big data growth, the digital universe pretty much doubling in size every 2 years. That's what I read. And again, AI, machine learning, they thrive on data. And digital age has seen explosion in the volume, variety, and the velocity of data available for these technologies to learn and to analyze. So then, there's a hardware aspect of this. And the computational power, the development of the GPUs, not the CPUs of yesterday, but the GPUs are super critical because these processors can perform the parallel operations necessary for some of these AI machine learning workloads. And the hardware innovation, I list some of the companies down below at the screenshot from CNBC. Again, these are the companies, some are well known, some have become super hot if you follow the stock market. So these companies and their innovation in the hardware space, that really enable a lot of these development in the specialized AI chips. And of course, you can't talk about the technology advance without talking about the storage capabilities. With large data, there are demands on storage. So advances in storage drastically reduce the cost and also increase the speed of retrieving enormous amount of data. These are large data sets required for AI model training. So let's look at some of the trend on the next slide. So this is a Google trend going back to 2010. And the top line, the big line, the highest point is 100, the indexed. So you can see there are two peaks there. One happened around 2018. What's going on in 2018? 2018, we saw advancement in the AI technology, including some breakthroughs in machine learning. And that led to the enhanced capabilities in image and speech recognition. So these things led to the integration of AI machine learning into consumer products in a big way. So you remember the virtual assistants, smart home devices, appliances, and including some of the early generation of the autonomous vehicles. So that's a 2018. Then you have a peak there. Then you look at the recent high. That was from 2020 to 2023. That's essentially the highest point on this trend analysis based on the public interest. So this is where you have the AI tools and platforms that allowing individuals and business to leverage AI capabilities. So this is huge. This is where you put the AI tools out of the hands of a scientist and computer programs into individual consumers. And of course, we all remember when ChatGPT came out to the scene, that's where people can really get their hands on, and any ordinary person could try on their ability or their interaction with the AI and machine learning tools in the natural language setting. So There was a saying that now English is the most popular programming language. I think that's a really insightful comment. So let's look at some more, maybe move on to the next slide. So this is another interesting kind of a chart depicting the how the AI performance had drastically improved. It shows along, let me just get you oriented here, the vertical dimension indicate performance as the ability to test, to pass a knowledge test. So under there, there's some fine prints of what these knowledge tests are, how they're structured, what they mean, at what level. And the horizontal axis really is a dimension for computational speed. It has increased quite a bit. Then you have some of the well-known AI systems plotted in this two-dimensional space. You can see the early part, you have ChatGPT 2, 3, 3.5, and all the way to the up right-hand corner top, you have ChatGPT 4, and some other well-known systems. And the bubble of the size of the bubble actually indication of how big the volume the training set is. Of course, you can see the training set also increased drastically. Again, these are some of the mega trends behind what happened to the AI machine learning technology maybe in the past 10, 15 years. Of course, most recent event was the breakthrough of the large language models and natural language processing that truly put AI machine learning in the hands of many, many businesses and many, many consumers. So let's maybe dive into our current topic, which is next slide, please. So again, the topic of this lunchtime conversation is about, kind of a AI machine learning's impact of financial services. Of course, want to see, hey, where do they intersect? The short answer is pretty much everywhere. But we won't have enough time here to talk through every single thing. So we're going to go through this lunchtime conversation just by using some examples. Here's a short list of examples. So maybe we'll move to the next one, and I can maybe dive a little bit into the kind of a technical aspect of AI machine learning. So what are these models? So this is a super high level look. So I'm going to mention a couple of them. Of course, the regression model, there's nothing new. The economists and the data analysts using the regression model even way before AI machine learning tools are available. But AI and the machine learning tools are taking regression model to another level. So in financial services, of course, these models serve as the foundation of predicting something numerical, so such as stock price, interest rates, so on and so forth. Then the next category of models are the decision trees and the random forests. So these are the models really good at classifications. So in the financial services, I help you to classify, flag certain customer behaviors, identify certain weird transactions such as fraud, and help to segment the customer base for marketing and for target product offering. Then, of course, next up is the neural network. These are deep learning tools, including the artificial neural networks. They gained traction in recent years because they have the ability to uncover hidden complex patterns in financial data. So that's super helpful. Then the next two I'm going to just go over quickly. Second to last is the support vector machines, SVM. Sounds very nerdy, but essentially these are the models that help you to do both classification and regression tasks. So they're kind of like a pretty all-purpose type of tools you can use, and particularly when the data set come in and relate it in a non-linear way. Right, so the very last one, clustering algorithm, the name kind of speaks for itself. It helps you to group certain things together based on certain criteria. In this case, in the financial services, we look at applications in portfolio segmentations, optimization, and risk assessment. So let's maybe dive into a little bit deeper into each one of these topics to see the applications. We could look at on the slide 6, which is next. So this one talks about what is being used in asset management? There are really three broad areas. One is portfolio segmentation optimization. It allows us to construct a portfolio that maximizes return. So that sounds very good. Of course, to get there, you need to be able to do the quantitative research. In the old days, good financial analysts would do it by hand with a calculator, with a spreadsheet. But now we can leverage the large statistical models to conduct much heavy-duty data-driven research and identify some of the opportunities that may not be obvious by a human analyst. Then, of course, the last one here is a big one. Alpha is a special term the finance people use to describe the extra return above and beyond risk-adjusted return. So that's a mouthful, but again, just remember, the alpha is more like a bonus for the investment. So machine learning tools can help us to generate alpha by identify some unique investment opportunities. So let's look at what's the AI's machine learning's application use cases in the trading area. So essentially, trading again used to be done by the traders in the physical exchange, shouting, communicating on the phone, on their handheld devices. But now some of the trading are really moving to kind of an AI machine learning route. One thing that AI machine learning can help is the trading strategies, right? These models can analyze the vast amount of data and figure out what's optimal with the real-time adjustment to the market conditions. So that's super powerful. Now, of course, if you're a trader and dealer, you are also engaging in the market-making activities. These are the things that you do to quote, bid and ask prices for certain financial instruments on behalf for the clients in order to make a market. So in the process, you provide liquidity in the market. Hopefully, you make a little bit of money off the spread, which is a bid-ask spread. Then, of course, high-frequency trading. You may have read about it in books, and I've seen maybe there's a couple of movies about it too. Again, these rely on ultra-fast computers to capitalize the fleeting market opportunities. So these are the opportunities that may last for maybe a few minutes, few seconds. So without some of these models, human beings just cannot process that large amount of information in that short of time span. Then, of course, the last one on trading side is any good trading platform have to have a pretty efficient, low-cost execution. So again, this is a way where these algorithms can come in to help to execute trade efficiently and that minimize execution cost. So that's look at what AI and machine learning can help regular individuals on next slide. Right, so AI and machine learning also plays a pivot tool in financial planning advisory space, particularly through the robo-advisors and automated investing. So robo-advisors, these are not robots, even though we have a visual image here, but these are essentially current day, these are digital platforms that provide personalized investments advice based on your individual preferences, risk tolerance, and your financial goals. The models can continue to learn from you, so it can carry on the dialogue, have the interaction with you, and also incorporate the market data to refine the recommendations, individualized recommendations. Of course, automated investing are the AI-driven systems that will automatically allocate and rebalance investment portfolios according to these predefined investing objectives, and also incorporating the market trends and investment behavior changes to adjust decision in real time. So overall, AI machine learning empowers individuals with more accessible and cost-effective financial advice. So no longer the financial advisory and planning is only available or made for more affluent part of the population, but now with AI machine learning tools, with these high-tech platforms, they're just a lot more accessible to a lot bigger slice of the population. So let's look at what AI machine learning does for the things that we all probably deal with on a daily basis. That's the banking, consumer banking in particular. So it has been in use in consumer banking in several areas for quite some time, in terms of the model, in terms of some of this decision-making process. But AI machine learning, again, have taken these activities or these applications to yet another level. Credit scoring, which is one of the core areas that rely on data analysis and information. And now with the new tools, a lot more data could be analyzed. When we say data, meaning alternative information. It's not just the traditional credit bureau information, but now you can incorporate more nuanced assessment creditworthiness. And by that, we can extend credit to a wider slice of the population. And that's so on the credit scoring side, and the main advances are pretty much on the dealing with alternative information. How do you process it? How do you drive value out of those information? Then, of course, on the lending side, the AI machine learning help to streamline the loan approval process and improving the speed and accuracy. And of course, the last one is related to something we just talked about in the financial advisory space, is personalized banking products and offer customer more sophisticated budgeting tools, investing tools, and financial planning services. Again, these allows incorporation of the personal financial data to have more tailored advice and offer actionable insights for the banking customers. So again, AI machine learning that have enabled banks to deliver more customized services and in a more responsive and efficient way. So let's look at what are the things that is another new hot area. It's the AI machine learning application in ESG space. So ESG, of course, stands for environmental, social governance. And this is kind of one of the areas of investing that attract a lot of attention, a lot of discussion, and there's a lot of development here. So what AI machine learning tools can offer in ESG investing is through driving the deep insights from enhanced data collection analysis. In this case, again, this is not the traditional data anymore. It's not your bill payment history. These are from the areas of unstructured data, such as the satellite images and some other reports to identify the ESG factors that were not apparent in the traditional financial information. So the investors can make more informed decisions. Then, of course, these models also help to improve the measurement of ESG metrics. Of course, the sentimental analysis is a bigger thing in this particular space, and natural language programs allows additional way to analyze the public sentiment from news articles, social media, and other text resources, offer real-time insights into potential ESG risks that might impact the investment value. And of course, each person or each investor may have their own personal preference with their investment portfolio. Then, in the ESG preference could be embodied through a hyper-personalization of investment portfolio based on their risk appetite and their individual investment preferences. Of course, the very last one is how do you incorporate integration of ESG data into the overall investment strategy. Again, this is super powerful because this is one of the new areas that a lot of investors are looking for a way to balance the financial returns with sustainable impact. So let's look at maybe one particular area next. Is a traditional area. There's a lot of stories, a lot of interesting tales around it. Is in the fraud detection and prevention area. So fraud detection, prevention has been around for a long, long time. We have been using models for. Prior to that, we use human kind of a detective eyes to sense if there's any potential fraud behavior. In the banking world, we have another set of regulations called anti-money laundering. So with these AI machine learning tools, they can analyze the transactions as they happen, flag them, and enable immediate action. So that's what we call the real-time monitoring. Then there's a pattern recognition when it comes to anti-money laundering. Typically, these are going to be based on large set of historical data to recognize, because these are not simple ones. These tend to be a little bit more complex. So the model had the ability to digest large amount of information to figure out what the complex patterns are. And then, if there's any subtle correlation between certain transactions and potential money laundering, we can detect it probably slightly better or sometimes much better than the humans can. Then, of course, the last one is about fighting the identity fraud. So AI in power system can check your ID if you upload one, can use biometrics such as the facial recognition or fingerprint scanning to verify the identity in a quick and a more reliable way. So these are pretty much all the good opportunities that AI machine learning have been used, adopted by financial services. Of course, there's other side of it. Maybe in the next section of our talk, I'll cover some of those. Next slide, please. So one of those areas is, again, related to the bias and fairness. And bias and fairness is not a new topic, but with AI machine learning, it has new implications. First of all, AI machine learning can process information super, super fast, but some of the information, historical information, may have some existing biases in the data. So that's one of the risks, is how do you ensure the data you use to train your vast models are not as biased? And how do you do that? That's kind of an ongoing question, right? So one of those ways is through kind of an algorithm to continuously monitoring update, make sure there's a way to flag them and have a regular audit to help to mitigate the bias. And of course, AI tool, as I mentioned, does help to improve the financial literacy and access in a global way, but still some of these tools are limited to some of the more tech-savvy customers. So one of the things that I think a lot of researchers are focusing on is how to make these tools more user-friendly through design, through education. Financial literacy is a big topic, has always been, but it's more so these days. Then, of course, if you are the regulator, if you're a lawmaker, if you're the people who are trying to make sure that we kind of know what AI models do, because they are super complex, especially when I get to the deep learning models, they are often considered as a black box, of course. So one of the challenges we have is to make sure these models have enough transparency and we can explain what's going on. Sometimes in the financial regulatory world, there's a requirement. You have to be able to explain what the model is doing. Of course, last but not least is data privacy and the security concerns, because AI models consume large amount of information, both traditional information, structured and unstructured new information that includes the visual, the data through from the satellite, so on and so forth. This raises the concern about data privacy and potential for security breaches. So let's look at maybe some of these risks from probably another dimension on the next slide. So this is something related to, hey, what about the overall financial system? One thing is that the central bankers and people at the Treasury, they care about a thing called financial stability and systemic risk. What are these things? These are essentially kind of a global term for there might be concentration risk. If we all depend on a few AI systems, that could lead to concentration risk where a single point of failure might affect entire financial system. That would be bad. And then the other is kind of what we call the pre-cyclical effects. So some of these models, because so many maybe banks and brokerage houses and the mutual fund companies, asset manager, they all use the same system. They may amplify a particular market trend. So lead to a pro-cyclical effects that could make a financial volatility worse. Right. So then, of course, the third point here is related to the black box nature of some of these systems that could make the decision behind these models very opaque and hard to understand. Of course, we talked about data earlier, and AI machine learning models consume large amount of data, but not all data coming as good of the same quality. So the poor quality, not even worse, sometimes you may have manipulated data coming into your system that could lead to significant financial errors and vulnerabilities. And of course, whenever you talk about the financial stability and overall systemic risk, you're talking about the interconnectedness. AI-driven strategies could lead to some similar trading behaviors, and it may increase the correlation during the market stress. That's what we sometimes call the herd behavior. That may be a bad thing when everyone's going towards the wrong direction. Then the last two things that are more technical side of it is if you are subject to some of these regulations, and AI machine learning tools might be used by some of these organizations to exploit the regulatory gaps, leading to some unmonitored risk-taking behaviors, right? So then the other possible adaptation is to look at the new data and figure out what's the latest kind of market trend, and figure out which part is not quite regulated. There's no clear rules against it, then you take advantage. So these are things that AI machine learning introduces another set of dynamics or challenges for the financial stability and the systemic risk. So let's look at what the government's been doing on the next few slides. And the first one is from EU. Why EU? Because they are kind of the first movers in this space when it comes to legislative work and regulations. So I'm putting on a couple of representative EU legislations on this slide, but they're by no means exhaustive. There are a lot more, but these are the three, in my mind, the big ones. And they're kind of focused on, data protection, privacy concerns, and digital resilience, and just generally what are considered the high-risk AI applications. They want to make sure there's guardrails around it about transparency, about obligations, about ways to minimize the risk. So of course, we have to come back to the US side. The next slide will give you a quick view of what's going on at the federal level within the United States. United States has a different political structure or government structure. So we have essentially the legislative effort at the federal level, then you have the state level. So this slide is going to focus on the federal level. Currently, there's no single artificial intelligence or machine learning law, but there are a number of efforts. First of all, on the executive branch side, White House not too long ago published the AI Bill of Rights. So these are the kind of the framework, not really non-binding, but these are important framework for people to think about it. Then within the federal agencies, NIST, National Institute of Standards and Technology, is developing AI risk framework. And of course, within the financial services, you have the existing laws on the book, such as the fair lending. Of course, AI is just another way doing the lending. So those laws will be still applicable. Same are the Bank Secrecy Acts and anti-money laundering laws. And the federal financial regulators did issue or have issued some general guidances. These are the agencies from Federal Reserve, FDIC, OCC, among some others. They work together. They issue these guidances that to their regulated entities. So these are essentially a quick kind of a glance at the federal level, what's been going on in US in the AI and the financial services intersection. The next one is going to be a partial glance of the state effort. So again, this list is by no means complete, but there are a lot going on in the state legislative bodies. DC has one near home. Of course, California has, New Jersey has. And so mostly you can see these are the kind of states around the kind of coastal areas. But then you do have in the middle country, you have North Dakota, you have Illinois. So they are essentially in kind of two groups of two broad categories in terms of these state level policy regulations. One is to ensure the kind of fairness, and the other is mainly focused on the ultimate decision in employment space. So there's a strong focus on make sure the AI hiring tools are not discriminative. So that's really pretty much all I have. And we're getting into the kind of a beyond the 30-minute mark. So this is my last kind of concluding slide here. As we tried in the past 30 minutes to cover kind of the implications of AI machine learning development and what the impact is for the financial services world through kind of the lens of a risk versus opportunities. We talk a lot about opportunities, super exciting, but there are emerging risks that all of us have to be conscious of and find a way to, at least from our personal side, when we learn from these things, and you work for an organization, whether it's a profit, or you work for a bank or a financial service company, you will have to be conscious of the opportunities that really present opportunities that will revolutionizing these areas, such as the trading, asset management, risk management, bank operations, but also they represent risks that including the biases, unfair credit decision, data privacy concerns, and the much larger, say, systemic risks due to the interconnected AI systems. So hopefully you have a kind of a slightly more nuanced understanding of what's going on in AI, machine learning, and how that impact the financial services. I am going to stop my presentation here. And Jonathan, I'm wondering if there's any questions. Do you have any questions?
I personally do not, but what I'd like to say is thank you very much for this presentation. And for people, everyone in the audience here, we are going to take questions now for Andrew. So if you want to type those in the meeting chat here, and we'll go through them. And again, Andrew, thank you so much for this presentation with the AI in financial services. So great job.
Thank you. Thank you for having me. And thanks for all the audience out there who dialed in today.
Yes. And so we'll do a quick little promotion here as well while people are typing in. We do have our online certificate in managerial finance here. Andrew is one of our faculty members here. You can see his bio here. We will include it with everybody. But we do have a certificate that has required courses, as you can see here. And we have some of our other faculty members, well, or instructors, I mean, for this. So if you have any questions about that, we'll be sending out information with that as well. But that will conclude the promotion portion of this. And so let's start looking at the questions. So I'm gonna, here we go, add myself in here. Okay, so again, if you have questions, just put them in the chat box down there, and I will moderate them here to Andrew, and we will, we'll get through them, and then, and before everyone probably has to get back to their days, their work days. So, all right, so let's take a look here. Okay, so far, let's see, Jacketta Roscoe says thank you. Okay. Mirna wants to know, can we have a copy of these slides? Would you be willing to send the slide deck out as well? I can send it out, but would you be able to include it?
So also I want to say, Jonathan, you made an announcement. This actually is recorded too. So essentially you have the whole session.
Yeah, so
the answer is yes and yes.
Yes. Great. Okay, so let's get into our first in-depth, kind of question here. So Stan wants to know, how might AI/ML expand, enhance banking/investing services to the underserved population? For instance, if AI/ML enhancements reduce costs of processing, would smaller investors be able to employ the services of an investment advisor? Would these services be provided to the unbanked population?
That's a very good point, and that's, I think, hopefully some of these applications are happening, such as with the ChatGPT, with some other similar tools, you are able to access lots of probably financial advice without having a large asset portfolio. In the old days, when you deal with a human broker, a financial planner, they typically will ask, hey, how large a asset do you have? And if you're too small, they may not be able to accommodate. So again, the development in the AI machine learning did lower the threshold quite a bit. Then again, not just only the financial advice that deal with a existing organization, but there are also a lot more tools that's available, either free or almost free online. So it get into the kind of financial literacy, education aspect of it. So these are a very, very good positive development that help to reach a little bit deeper into the customer segment. So if you ask the bankers, they always say, we want all customers. But oftentimes, the old way of doing the banking and financial services, you say, if you're a small business, we need to see at least 3 years financial statements. If you're an individual consumer, we want to have your credit score and how long credit history you have. But with these tools, we are able to expand that box, meaning to reach into the formerly known as unbanked population. Again, some of these applications, if you have just a cell phone, almost everyone have. Doesn't matter if you are a affluent customer or you are just a student working part-time somewhere else. You probably have a smartphone. And with a smartphone, you have access to many of these evolving applications. They're still being developed. There'll be more and more of them available at a lower cost. So hopefully that addressed some of your questions.
Great, thank you. So Thomas wants to know, are there notable tendencies in ESG apps of AI that are especially pertinent to climate change issues?
I think they are. Again, it's a very fast evolving and developing area, and there are some topics are more structural, such as make sure the data's, because again, it's somewhat a new area, so there's no consistent data sources. So there are a lot of people in that space trying to say, can we clean up and compile comparable, consistent information so people can make a decision and they can compare? Of course, a related topic is a kind of a gaming aspect of called greenwashing, right? Some of the just not truly ESG, but they just put a label on it saying, hey, now we're ESG as a marketing angle. But again, with these models and these tools, you can actually peel back to analyze what's deep inside of it. Now you can make your own assessment, set up your own criteria saying, is this really, my idea of ESG? And then of course, there are third-party providers are providing certain type of a certification and kind of a objective assessment, whether some of these are ESG or not ESG. So it's still a developing area.
Okay, excellent. CP let's see, thanks for the presentation, and I will echo the sentiments there. What is your opinion on Microsoft's Copilot for Finance?
That one I have to probably duck a little bit. I have not used it, so I would be very hesitant to provide a assessment, and I don't want to endorse any particular tools.
Yeah.
But I think these are good development. And again, I think the market will be a lot more complete if we have a lot of competitors in that space. So if Microsoft offer one, if Google offer one, if Amazon wants to offer one, and someone else want to offer one, now you have really a competition in the marketplace, and eventually the users will hopefully pick the winner at the end.
Yeah. Okay. So focus on the how to use the tools, not specifically the tools, maybe.
And also, I'm very anxious to see there are more people jumping into the space. Again, this is a hot area. It's fast developing. A lot of companies, especially in the tech space, you don't want to be left behind. So that's, to me, it's always encouraging. There are more providers in the marketplace, indicate, at least in my mind, a healthy market.
Great. All right, so let's jump to the next one. Jay wants to know, what's the level of risk of robo-advisors implementing trading activity that dramatically alters the stock market without human involvement? So
that's a very good point. Again, you don't need robo-advisor to do that. Individual investors could do that not too long ago. You could move the market. But again, with these automated tools, the risk there is it may amplify some of these herd behavior. Sometimes it may not be herd behavior, it could be just manipulative. People decide, hey, we're gonna get together, maybe 5,000 of us, and move things together. And I don't know if the AI would start talking to themselves, among themselves, saying, hey, let's all do this, either for or against this particular stock, a particular bond. So again, there's always a possibility, but if the regulations in the right place, which we do have these regulations on the book against the bad behavior done by human, those should be applicable for the AI and the machine learning tools as well. But again, there will be probably new rules, new laws being developed. But I think the hesitation is always the lawmakers, regulators, they don't want to jump too much in the front, because there are a lot of times you have a thing called unintended consequences. You kind of want to observe, have enough data points before you start putting the laws down on the book.
Okay, and just real quick, is this going to make human financial advisors irrelevant with the robo activity?
Right. So again, I prescribe to the notion of this is augmentation, not replacement. So again, if you're a human advisor, if you're, say, a good friend of mine, if you come to me saying, hey, Andrew, I'm worried about, I'm going to be replaced by these robot advisors, and I'll say, no, you don't, right? Because again, the human in the loop is super important for any AI implications. So for this, I would say, instead of handling, maybe 30, 40, 100 clients today, now AI will enable you to handle maybe 500. Because it will lower the threshold, the size of portfolio that you can reach out to more clients. But AI will help you deal with a lot of heavy lifting in terms of data processing, sentiment analysis. For example, if you have one saying, hey, I'm following these couple of things, and I want to have my natural language or large language model to process the social media recent post or the media reports on this particular company. And instead of you reading out reading out all the publications on it, AI will do for you. Maybe will do a summary for you saying, hey, here's sentiment in general is negative. And then you will take certain actions. Of the positive, you'll take certain actions.
Sure. Okay, so this one's kind of two parts. So apparently we have some students joining us today. So everyone says, thanks. I asked my students to attend as their final paper will be on AI and asset management. So,
oh, wow.
So I think this is one of the students. Mansur says, as students and future banking professionals, how best can we embrace and stay abreast of all the changes that are taking place at such a rapid pace?
Well, I would say as a student, you're at an age where you have the ability to absorb a lot of new information. I would say, go out, of course, Georgetown classes to me always at the beginning point. It's not the end of your journey for learning, right? So never stop learning. And in the old days, I would say, well, you probably should learn one or two programming languages. But now I'm taking that off the list. Because again, in terms of coding, I think these days maybe ChatGPT-4 can do a better job than I can. But the bigger idea is what part of a human intelligence that machine cannot replace or cannot do better today. That's where I think you really want to think hard and deep to look at your own strengths, weakness, and to explore that part. To me, the human intuition still not quite. Then it's kind of that's a big one, and the nuances. A lot of times the machine cannot quite get there. Then if you are a banking professional, it depends on what kind of banking you do. If you do consumer banking, you're dealing with a large number of retail customers. If you do corporate banking, you're dealing with business leaders, the CFOs of the large Fortune 500 companies. So that human interaction, the interpersonal skills and presentation skills, those are the things that a machine cannot replace or do as well, at least at the current stage.
Very insightful. We have two left, so we'll get through this and then we'll wrap up here.
That's good.
So Brandy wants to know any particular LLMs to be on the lookout for as standouts in the FinServ space. I'd imagine the model will need to be there's some words here that are not in my expertise. Sorry about those. Obfuscate customer data and banking data plus monitor it itself to avoid herd risk outline. Thanks. Did I get that right?
All right, so let me try to take a crack at this. Based on the question, I think one of the thrust was
particular LLMs.
Right, any large language models you recommend. I will refrain from doing that. But I'll say personally, I use ChatGPT-4. I pay $20 a month for it. So I put money behind my words. But again, I have not tried all of them. So I cannot endorse any particular tool. But I think if they are in use, they are subject to what I call the market discipline. They're being used by millions and millions of users every day, every hour. So if there's anything wrong, someone will post it saying, hey, that thing's ridiculous. You probably learned from the recent news. People are not shy about sharing what was wrong with the model. So to me, that's a good thing. So literally you have people testing it, kicking the tire, right? So I would say any of these models probably would be good enough for whatever the task you were thinking about having it do. Then the second part, I think, where you might get into is about the data and the privacy and all these concerns. Is like if you have customer information, if, for example, I remember OpenAI was trying to use some newspapers information to train the model, and the newspaper said, no, you cannot use it, right? So again, when you deal with, say, a personal information that's protected by privacy law today in the banking world, then there are techniques you can make it kind of nameless, anonymized. There are particular tools you can kind of blend stuff that you still get value out of it, but you are not getting what we call the personal identifiable information, PII. So that there are many tools out there, but the standard is still evolving. And then, of course, once you have these tools to scramble it, there probably someone's trying to develop tools to untangle it and then kind of revert back. But some of these processes are one way, such as the encryption. It's very hard to encrypt. It's very hard to decode it. So I'm going to stop there before we get into something too nerdy.
Okay, great. So let's see. Let's do one more here, and it's from Jaya or maybe Jai. Sorry in advance here. She said, this person says, great presentation, thanks. So again, great job. When do you anticipate the application of AI within federal government agencies?
It depends on how you define it, right? I think in terms of a little bit too close to the agency side. So maybe let me just kind of step back a little bit. I'm going to point to the legislative branch, in this case, U.S. Congress. I think it was last year, one of the lawmakers who's a big advocate of AI tools used in the legislative effort. So he came to the floor. He gave his short speech about why AI machine learning is good for writing bills or proposing new laws. And his speech was written by a large language model. It was very good speech. So again, my point there is they are, at least for productivity, especially you're in the business of processing large amount of information. I think there are applications of these tools not to help you make a decision, but probably help you to process information, organize information, summarize information, sometimes translate information, especially, you think about the profession of translator. I think these days the large language models can do pretty good translation. Even some very literary content, they can do a decent job. But if it's a user guide for appliance, the translation will be flawless. It will be done in 3 seconds into 50 different languages. So again, I want to just point out to say there are examples, user cases in the federal government in terms of potential productivity gain by using these tools. But there again, depend on the agency. There are probably a lot of other use cases that I'm probably not going to be able to cover here.
Okay, well, great. All right, so I'm going to stop it now as far as Q&A here. Of course, reach out to us and everything if there's some burning questions, stuff like that, or questions about the degree or the certificate program or any other professional offering. So with that said, thank you so much, Andrew. I appreciate it. Again, Andrew is one of our faculty or instructors within the Managerial Finance. And so this has been Knowledge at Noon, AI in Financial Services, the Opportunities and Risks. And I just want to thank you one last time for, gracing us with this information.
Well, thank you very much for the opportunity and platform, and I'm always happy to share what I know. And again, thanks for all the attendees of this, lunchtime event.
Yeah. Bye, everyone.
Take care. Thank you.